Hello everyone, welcome back to my YouTube channel. Today we will be talking about the American Rescue Plan and how it will affect your health insurance premiums. Well, the American Rescue Plan Act of 2021 was signed into law by President Biden on March 11, 2021, and among other things, it provides additional federal premium assistance to many Americans, including to current Covered California members. This legislation allows many individuals who never qualified for any subsidies or discounts to qualify for the first time for a reduction in their health insurance premiums. For some individuals, this will happen automatically, and for others not. So please make sure to watch this video until the end, and I will explain later what you have to do to pay less for your health insurance. The amount of assistance provided is based on your household income and family size. In order to understand what the income limits are to qualify for extra savings on health insurance, it is worth to look at the program eligibility by federal poverty level for 2021, which is worth more than 1,000 words. This table is revised every year to keep up with inflation, but this year, this is the second time the FPL is slightly adjusted. If you are one of my clients, most likely I've sent you this table before, and I work with it on a daily basis when helping my clients. This is very, very useful tool, and it helps you understand what programs you and your children qualify for before submitting the application for eligibility. If your income is higher by even $1, the entire eligibility will be different, oftentimes not in your favor. I will have a link under this video with the printout of the table so you can save it and refer to it for your eligibility. So this new updated version of the FPL table got rid of the California state subsidies, increased the income limit slightly for medi-cal eligibility, and it extends the federal premium tax credits for health insurance beyond the 600% of the federal poverty level. So let me briefly explain how to read the table. If you are single and your income is below 138% of the FPL, in other words, the income is less than $17,775, then you qualify for medi-cal. If your income is above this amount, then you qualify for a private health insurance plan via Covered California with subsidies. The amount you pay for your health insurance increases as your income does, and is based on the new legislation. You should not have to pay more than 8.5% of your income for health insurance premium, even if your income is very high. Here's an estimate of how much you will have to pay for your health insurance based on the various income levels of the FPL percentage. This is an estimate, and if you need an exact estimate, please feel free to reach out to us, and we'll gladly help with the exact cost estimate and provide guidance. If you currently work with a licensed agent, feel free to reach out directly to your agent and they will explain in details the rules of this new legislation. If you don't have an insurance agent and are on your own, I am happy to be your agent of record in the Covered California. There is no additional cost for this, and you can easily delegate us from your account dashboard or by asking the customer service representative to delegate us to your case. I have a link below this video with details on how to delegate an agent to your Covered California account. Okay, so now moving on, one more thing I have to mention. That is kind of a big deal. If you received unemployment benefits anytime in 2021, make sure to report this to Covered California. Starting in the summer of 2021, your eligibility will be redetermined and you will receive extra benefits. Even if you had other income that is higher, you will still qualify for the enhanced silver benefits. If you have been working with me, you know that I always recommend people apply for the enhanced silver benefits if they qualify. And these plans are way better than the platinum or gold plans. If you're not sure if you qualify, this table will help you with that. Look at the top of the table, the income limits to qualify for Silver 94, 87, or Silver 73 based on your household size. If you are confused, talk to us and we will help. Now, let's see how the new subsidies will help you via an example. Let's say that this is a single 50-year-old individual residing in San Francisco with annual income of $80,000 per year. Prior to American Rescue Plan, this individual wouldn't have qualified for any subsidies and had to pay full premium for their health insurance. Good luck surviving in San Francisco on an $80,000 salary per year while paying over $600 for health insurance every month. So, as you can see from my estimates, this is a typical health insurance premium for a bronze plan. I haven't even included a PPO plan here, as those are even more expensive. Let's take a look at how the American Rescue Plan will help this individual. As you can see, the new premiums have dropped dramatically. So a 50-year-old single individual living in San Francisco and making $80,000 a year will pay almost half for their health insurance premiums. If they had a bronze Kaiser plan and paid $605 a month now, the premium will be $374 for the same plan, and that's per month. I have to say that these are estimates and it's not a guarantee that you will be paying the same. There is no one-shoe-fits-all approach here, and in order to get the correct estimate, you will have to run your own numbers. You can reach out to us and we will gladly do that for you. Now, one more thing. If this person loses their job sometimes in year 2021 and starts receiving unemployment, then their health insurance premium will be reduced again. And ta-da! This is what they will pay. $1 a month for a bronze plan, and this person will likely qualify for enhanced silver benefits. Keep in mind that Covered California does not have a crystal ball, so if you become unemployment, no one will know to reduce your health insurance premium until you update that information in your case. Same goes for those who buy their health insurance directly. So if you buy your health insurance directly from Kaiser, Blue Shield, Oscar, HealthNet, Sutter Health, and so on, and if you want to pay less for your health insurance, you will have to apply for the same plan on Covered California. You can even keep the same health insurance plan if it's available, obviously, in Covered California. And if you've paid part of your deductible, you won't have to start all over. It will be accounted for. Now, I don't know how this accountability of deductible will be implemented by the health insurance companies. They will certainly have to do lots of hard work and spend the big bucks to make sure that the process goes smoothly. I don't know about you, but I've been in this business for a while and I've seen issues with simple things like paying a premium where health insurance companies messed up even the simple transaction. I pray that they won't mess up this entire thing. In theory, it looks really good. Let's see if in practice it will be as easy and we won't have to spend hours on the phone with the insurance companies resolving the issues. What else I was going to say? Yes, very important. Worse than dealing with health insurance companies, in my experience, is dealing with the medi-cal and mixed households. I have nothing against this program, but boy, they are slow and sometimes make mistakes along the way. So that being said, if you have an enhanced silver plan 94 and haven't updated your income for the last few years, do yourself a favor and update that as soon as possible. Maybe 5 years ago, when you just graduated from college, your income was $18,000 a year, but if your income is $500,000 a year now and you haven't updated the information in the system, you will be eligible for medi-cal, and then good luck convincing the social worker that you are making the big bucks now and don't qualify for medi-cal. On a serious note, please update your household income as soon as possible if you currently have a Covered California account. The income limits for children to receive medi-cal also have been updated, so carefully look at the table to see if your children may or may not qualify for medi-cal. For those who don't know, medi-cal is a government program the same as Medicaid in other states. It's very easy to check on the eligibility. Just look at the household size, and if the household income is below 266%, that's 266% of the federal poverty level, then children younger than 18 years old will qualify for medi-cal. If the income is above 266%, then children will be included with their parents and qualify for private health insurance plans with subsidies. I have to mention that if you currently live in San Francisco County, San Mateo County, or Santa Clara County, you will also want to check the eligibility for the County Children's Health Initiative program. This is the same thing as medi-cal, but it costs more money, and families in those counties won't be able to take advantage of the subsidies and get full tax credits if their income is between 266% and 322% of the federal poverty level. This may be very important for some people, so I encourage you to take a look at the eligibility. If you've lost your job and enrolled in COBRA, the American Rescue Plan provides federal subsidies to cover 100% of COBRA premiums for up to 6 months from April 1st through September 30, 2021. Now, this is also kind of a big deal. If at the time of application for health insurance in year 2020, you stated that your income is, let's say, $30,000, but your income ended up being $60,000, in a normal year, you would have had to pay back all the big bucks that helped you lower your health insurance premiums. However, for the tax year 2020, the American Rescue Plan suspends repayment of excess advance premium tax credit owed to IRS. If you've rushed and filed your taxes before this legislation was signed into law and had to pay back the advance premium tax credit, you may want to talk to your accountant and revise your 2020 filed tax return. Here's what you have to do to qualify for lower monthly premiums on health insurance. If you are currently enrolled in a Covered California health insurance plan or one through the marketplace, then Covered California will automatically redetermine your eligibility and provide updated subsidy amounts. If your Covered California is not up to date, or you did not provide consent for verification, or your coverage is terminated at the moment, you may have to take extra steps to secure a lower monthly premium, as in your case, it will not happen automatically. So I urge you to check your Covered California account or reach out to your favorite insurance agent. And if you don't have an agent, then I can happily help. So please reach out. I'm very nice and I love helping people. If you get your health insurance directly from the insurance companies, then you may want to get an estimate and see if this new legislation will help you save big bucks on your health insurance. I can run the estimates for you, so you know what to do. Here's my website for your reference, insurancecenterhelpline.com. If it turns out that you may benefit from this, you will have to apply via Covered California. You may be able to keep the same health insurance plan and even account for your deductible and out-of-pocket max. This is fair, and I think it's an awesome idea if implemented. There might be situations where you have a health plan that is not offered in a Covered California. If that's the case, carefully look at the benefits and compare it with what you can get on the marketplace. One or more family members is offered a health insurance plan through their job that is considered affordable, then no other household members or dependents who are also offered employer-sponsored insurance through the same employer are eligible to receive financial help if they purchase the insurance through Covered California. Employer-sponsored insurance is considered affordable if the employee's share of premium for the lowest priced plan available to cover just the employee, not their dependents, is 9.83% or less of their household income for 2021. The American Rescue Plan did not change the 9.83% of household income determination for the affordability. I believe I've covered everything that is currently available on this topic. It's obvious that there is tons of information available that I could not fit in this video. So stay tuned. I will definitely make available new information on this topic as it becomes available. I hope that you found this information helpful, and I hope that you will like it, share the content with your friends or those who might also benefit from it, and consider subscribing to our YouTube channel. I appreciate and thank everyone who helps me and supports my content, and especially big thanks to those who watched this entire video until the end. Thank you.